What is the trend right now, Professor Clarida, in inflation?
Well, thank you for having me on, Tom. Good friend of Ethan, and Phil Kagan was a colleague and a friend for many years. I look at Dallas Fed trimmed mean 2. It's running somewhere in the mid-2s on inflation. That's down a lot from a couple of years ago, but still obviously somewhat above the Fed's long-run goal of 2%. But I think that's a good reading right now.
Rich, when you look at the pushback, and it is subtle pushback in this statement, why do you think this Federal Reserve is not quite prepared to fully embrace that rate cut conversation taking place on Wall Street?
Well, on this one, John, I actually agree with them. I myself, looking at the data they're looking at, would have thought March would be too soon. We don't get a lot more data in March than we have today. Moreover, as you've pointed out on air, and I've been watching, there is still some upside risk on the inflation picture. So I just think good policy prudence would call for getting more information, and I applaud what they did in the statement today. They did. I don't have it in front of me. I read Mike's account. Looks like there's a lot of red ink in it, and I think that made sense today.
Yeah, especially with that particular comment. The committee does not expect it will be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving sustainably toward 2%. I'm wondering, Rich, do you think that the New York Community Bank Corp issue changes the equation, even on the margins for the Fed, and if you were on the Fed, for you?
Given what I know right now, Lisa, I would say not, but I do think that the reality is that we have a number of regional banks in the U.S. Above 100 billion, but not in that mega category. And the Fed did what it needed to do last spring, and I have no doubt that they will be there if further is needed. So I'd say right now this doesn't appear to me to be systemic. But whenever banking is involved and you see an unexpected loss, it certainly is on their radar, and I'm sure it is.
Rich, as you know, as we know, a lot of thought goes into the language that gets put in this statement. That line, greater confidence. A lot of people are going to stress test that line, greater confidence, for the next 1 month or so. Neil Dutter, our good friend over at Renaissance Macro, writes in, what exactly does greater confidence mean? Can you talk to us about that, Rich? What do you think greater confidence means? And I'm going to ask this question just to wind up TK. Is it 1 CPI print? Is it 2? Is it 3? Rich, what is it?
Well, I think, at the risk of exaggeration, you might have 19 opinions on that on the committee. I think the center of gravity, though, look, the price inflation numbers have been moving in a very good direction. 6 months now, core inflation or Dallas Fed measures are definitely close to 2%. But we do have an economy in which wage inflation is running about a point hotter than probably they think would be consistent with the long-run goal. So I think implicitly they'll be looking at a number of indicators from the labor market. We got some good news today on ECI, but even with that, ECI is still probably about a point hotter than they would ultimately like to see.